Welcome to the Smart Money, Dumb Money Show. I am your host, as usual, Keith Richards. I am President and Chief Portfolio Manager of Value Trend Wealth Management. And I'm a technical analyst, as you guys know. Today, I'm doing another interview. And this man is runs a subscription service that I actually use. Now, you guys know that I buy lots of research for the process that we use at Value Trend. And you know, the reason I'm bringing Dwight Galusha on today, he runs a program called Set Your Stop. And Dwight's program is actually an ideal program for you guys to consider using yourself because it's priced for retail investors. It's actually crazy cheap, and it's a really, really effective way of getting stock trading ideas. Like any research program, you know, it's just ideas, and you always have to do your own follow-up and own research. But I have found that Dwight's program is one of the programs I actually go to pretty regularly when we get into the buying mode, because we can instantly find ideas that are breaking out, and he's really good at breakout setups. So I won't get too much into what Dwight does, because I want Dwight to explain what he does. But I want to introduce Dwight, and Dwight, thank you for coming on the show.
Hey, Keith, thanks for having me.
So Dwight's background is really cool. Some of you will remember on some of the video interviews that I've done, you guys might remember I interviewed a man named Greg Schnell, who is fondly known as the Canadian technician. And Greg actually ran a research program that I subscribed to. And Greg was a mentor for Dwight, and Dwight actually kind of took over and then I think enhanced what Greg was doing. But I'm sad to say that Greg is no longer with us. He succumbed to a disease, and he's no longer here. And so I feel very pleased and proud that I was one of the people that interviewed him before he passed. And I'm also very pleased that Dwight is part of Greg's history. So Dwight, why don't you bring us up to speed where you left off with Greg, and how you've morphed Set Your Stop from the work you did with him.
Okay, thanks, Keith. Yeah, no, Greg changed my life. He was like a father to me and took me under his wing. So a lot of what he did hopefully lives on through my work, and I appreciate everything. And I wouldn't be talking to you today if it wasn't for him. So thank you. So when I first came up with the idea of Set Your Stop, nobody was doing what I wanted for myself in Canada. And I was subscribing to a few programs in the States, but there's nobody looking at Canadian stocks. So I made my website, and through the website, I became friends with Greg. And then Greg asked me to come work for him at Osprey. So it was cool because that forced me to start looking more at the American side of the market. So with Set Your Stop now, we look at Canadian charts, so it's good for the Canadian investor, but we also have a big focus on American stocks as well. So we try to do both. But so the goal with Set Your Stop is I've created a series of 5 different momentum scans. And the goal for those scans is to seek abnormal volatility that'll show up for potential breakouts. And I know what we talked about earlier was what I like to use is Bollinger Bands, or what the scans are created for is to look for areas of tight contraction that are starting to show the potential of momentum. So what we like to look for is Bollinger Band squeezes, or when you look at, we combined these momentum scans with classical chart patterns. So when you get all of these patterns, you'll get triangles, wedges, and a lot of these patterns will work their way into a tight apex. So lots of times you'll hear people say tight on the right or into the apex of a triangle. And the goal is periods of low volatility are often followed by periods of high volatility. And oftentimes you'll get these explosive moves. And you can trade them any way you want, because lots of times those explosive moves could give you a big percentage. But the idea is to look for the beginning of a big trend, which is an outlier. And then the goal is to use systematic trading to try to capture trail with the proper stops, so you have proper volatility in place.
Yeah, that's I'm glad you covered that, because one of the things I like I am a subscriber to Set Your Stop, and I mean, I'm I eat my own cooking, so to speak. So if I'm endorsing what Dwight does, it's like I've been subscriber for a while, and it's largely quantitative, and so it takes a lot of the emotion out. And actually, Dwight and I were talking on the weekend before we did this interview, and it was I love this, and I've actually, you learn something from everybody. And Dwight said, like one of the things you gotta the worst words to hear from an analyst, and you hear this all the time on BNN and all these guys, is I think I feel my opinion. And so Dwight is worked out a way that, this is all just conjecture, it's just opinion. So Dwight is a quant kind of guy. So so maybe you could expand on that thought. Dwight.
Yeah, so it's funny. So I love everyone in industry, but I really don't fit in a sense. So what I've tried creating was something that's different. And what I find is a lot of people in industry, they just regurgitate from the textbook, or they're taught talking points from people who learn talking points from someone else, but they don't even understand what those talking points are. And we just hear them repeated all the time. And it's kind of funny because with the chat room, we'll talk about, or sorry, with the website, we have a chat room as well. We call it the Workspace, but we have a joke in there, and I'm like, okay, let's tune into fast money. And every time let's play a drinking game. And anytime you hear someone say, I think, I feel, we take a shot, and we see who can last longer, the episode or us standing. And so I was telling Keith, there was a funny story where I was my father has a company, so I was driving along with one of his employees, and I had fast money on, and my head was about to explode, and I wanted to shut it off. And I looked at him, and I'm like, listen, I'm like, count how many times you hear them say I think or I feel. And we didn't even last a minute, and he couldn't stop laughing, because it's like, I think I feel. So I call it I think I feel investing. And the problem with that is when these people go on TV and they think and feel, and they say what they think is going to happen. If the market goes against them, their reputation's on the line, so they can't come on and say I was wrong. So the goal with the website is to not make predictions, but to react to what's actually happening, right? So that's the thing, is like, where I never want to tell anybody what I think, because I have lots of thoughts and opinions, and studies show that you can't completely remove biases from people. But I can say I think one thing one day, and then I run my scan results, and then the charts appear and something totally different is happening. So I got to react to what's actually happening, not react to what I think is going to happen.
I love this. It's funny because just had a client meeting this morning, and she was talking about, well, what percentage should we hold in cash or equity, whatever. And I said, well, I can tell you where we are right now, because we use quant models. Readers and watchers of this video will be familiar with this one I call barometer, which just puts a bunch of 11 indicators together and comes up with a score for risk. And so we adjust cash versus equity accordingly, and sectors accordingly. And so I said, well, what should we? I said, whatever it says. So I said, I said, next month will be different than this. I just don't know, we're just going to do whatever it says. So that's amazing. And actually, what I want to do right now is, the way you told me, you've got a few slides, and even we can bring your website right onto the screen here, because I'd really like to have the viewers see how it is you work, and how, like, what I'm looking at whenever I go on your research page, what I'm seeing and how I'm using Set Your Stops. So maybe you can present to us like how typically a user will use your system.
Okay, yeah, I can share. I got so a report I'll share, and then I've got some examples of what we try to achieve. So can you see my screen there, Keith?
Yes, it's up on screen. Yeah.
Yeah. Okay. So this is just what the website will look like when you sign on. I'm sorry, I'm using my small monitor today because everything goes all wonky with my settings. When I use the big monitor, I usually trade off of. So this is just what the website will look like when you sign on. There's a short little video that kind of explains what we do. And then you can come down and you can see we have a daily report, US setups, the Canadian setups, a weekend report, and then the workspace. So I'll go over the workspace real quick. Can you still hear me, Keith?
Yeah, I can hear you. Yeah.
Okay. So if okay. I just got this warning that came up. So when I issue my report every night, but the thing is, we have the Slack workspace right now, and it's a great group of people. Oh, see, there's your name right now, Keith Richards. Wow. So um, so I'll start off in the morning. So I run my momentum scans, and this is another thing Keith and I were talking about, where lots of times you'll hear on TV, people are saying the markets can't go any higher because breadth is weak. And people, they look at the breadth indicator that everyone's looking at, but they don't really understand what's happening. And the thing with my scan results is I run the scans, and one of the scans I run is within the S&P 500. So regardless of what a breadth indicator says, I get to see what's actually going on with the tickers. And there's lots of times you'll get these symmetrical patterns that often break to the upside, and it's suggesting that breadth is starting to expand. It's actually not going to be weak like everyone is suggesting. So when I run my scans and I do my report at night, we have the Slack workspace. So every morning, I post reports. We have a report channel, and I like posting the reports because instead of me rating out a paragraph, regurgitating what's in the news, you can just read the news, right? And the goal is for us to just share ideas and give people information or give people research so that they can help make their own decisions. We never say buy or sell. I'm no one's guru. I just provide the research I do every day. Some people like it, some people don't. But this is just this morning. So people are sharing ideas. Here's some charts I showed, like Pelletiers popping. I'll scroll down. So there's an idea. So I ran the scan results. This was the Canadian scan results. It was kind of late because I ran it early in the morning. So I was getting ready for this talk. But I share all the tickers, so you can copy and paste the tickers into your own platform. You can click on the candle glance, the penny scans. So then here's an idea to some of the scan results if they'll load here. So you can kind of see, so like right here, this was a stock. The ATR is crazy, so it's volatility, but it's gone from like 9 to 13 in a short period of time since we started showing it. Super microcomputers showing up. So this is just kind of an idea of what the scan results will look like in the morning. And
if I can interject, actually, one of
yeah.
the real beauties of your system, right, is that when you see, you know, the small picture daily chart, you click on it and boom, it goes right to stock charts, assuming you have a subscription to stock charts, being better. And you can turn it into a weekly or whatever you want to get an even bigger picture. It's amazing.
Yeah. So everyone's great. So that's just part of the service. And the idea is so people can get real live ideas during the day. And lots of times I'm not in the chat room. So our team's great. It's more like a coffee shop of people just sharing ideas. And I'm from a small town. So like the good old boys go to the local A&W to talk about gossip. We just come in here and share charts. And it's great because everyone has a different style. And what I've learned is there's no two people. I've had many interviews, and that's the other thing. If you subscribe, we can talk and we can set up help you set up your own trading systems. But there's no two people are trying to achieve the same thing. And I always say that we're all on the same never-ending journey of learning. The only difference is some of us have a head start. So we're all constantly learning from each other. And the goal is just because someone posts a chart, it doesn't mean you follow it. You take that ticker, plug it into your own system, see if it fits your strategy, your system, what you're trying to achieve, right? So I got that kind of out of the way here. So then on the website, we have all the daily reports. So this is a report from, I think, so July 3rd. I thought this might be a good one to go over. So here's the goal. Once we get these signals, the idea is to seek momentum. And when momentum kicks in, oftentimes it'll trail above certain moving averages. And I know a lot of people in industry will use an ATR. So an ATR is average true range. So lots of times people will set a two times stop or 1.5 times ATR stop. But for me, it's just easier to use moving averages. And the thing is, this isn't a system that you can program. And I know I had one person on social media trolling me saying I was trying to sell system. It's like, I'm not trying to sell anything. It's just a way that once you get these technical setups, it's a way to define downside risk. And it helps a lot, right? So this is just the basic rules of what we're trying to achieve. And I have some examples of that have worked. So this is kind of what I do with the daily report. I'll do a little commentary for what happened in the day. And I like to try to provide a funny cartoon. And this is one. So what was interesting was the jobs report came out and precious metals all started to rip. And we have a joke within the chat room that what noise does a money printer make, and the money printer go burr. And it's just like interest rates are starting to come down, and regardless of what governments say, they're going to have to continue to print money to pay for their debt and all their expenses. So this was a fitting cartoon for that day. And that morning, so I think it was a few days before all the precious metal charts started to show up on the scanner results, and they're still underneath the trend line. So lots of times when we run these scans, it'll show how does that work? So we run the scans and you might get one gold stock or a certain stock from a certain sector, but when you run your scan results and a sector as a whole starts to appear that hasn't shown up before, it suggests that money's moving into that sector because all of a sudden you're flooded with stocks from a group that hasn't showed up for a while. And when that happens, it doesn't mean the move's about to start, but it gives us, it says take note and pay attention to this. So they started to set up, price ran into the upside of a trend line, then it consolidated sideways. And then when the jobs report came out, price started to explode. So this is the chart of gold. And this is an idea of what we want to try to achieve. And the moving averages show the systematic rules that one can follow. So this is exactly what we look for. So in technical analysis, there's a saying, the bigger the base, the higher into space. So gold, this was a chart we were watching for a while. Price consolidated for multiple years within a consolidation pattern. You can see the flags or the channels on the right. Price started to get tight on the right. We started to get the scanner result. We started to get gold miners. And oftentimes the producers will start to lead the metal. And in industry, lots of people use a ratio chart of miners to the gold. And when it starts to break out, that's usually a bullish sign. So we've been watching this gold chart. It broke out to a new all-time high from the right side of a multi-year base. Price consolidated, got tight on the right. And when it started to break out, you get those explosive moves. And that's exactly what we look for. And you can see on that moving average, once price started to break above, it walked above the moving average until it didn't. And what's kind of cool about this pattern is price went sideways for multiple months. It formed a bullish pennant on the weekly chart. So again, price consolidated to the apex of a continuation pattern. Price got tight on the right again. News came out, so we needed a reason, right? The reason came out, the jobs report, the money printer go burr. All of a sudden, these precious metal charts were showing up on the scanner. They all started to explode higher, and now price of gold setting up on the right side again of a continuation pattern. And the idea with what we're trying to achieve is once you understand these technical patterns, they have a range of outcomes, and then there's a high probability of it working. So what I like to say is we want to expect the expected. So if the expected doesn't happen, we can set a tight stop loss order. So risk reward is you risk a little, and then expect happens, you get those explosive moves from that tight area of contraction, and then there's a way to trail with momentum, or to trail momentum with a stop loss order, so we don't get stuck in the I think I feel camp if it doesn't work, right? And then that's the thing. So once you understand the range of probable outcomes, you can create a plan that captures the move but protects to the downside. And so here's the chart of silver. This was just beautiful. So on the weekly chart, there was a huge symmetrical triangle forming, a multi-year symmetrical triangle, and the trend lines. Sorry, I didn't prepare a chart for that, but the trend lines worked their way to an apex. So a symmetrical triangle is called a coil. And the idea is once it works to that apex and we get that tight area of contraction, it's like a compressed spring. And then when price breaks out above the upper trend line, usually those moves are explosive. Or you can compare it to holding a basketball underwater. And then once price breaks from that area of contraction, it explodes higher. And that's what happened down here with silver. Once price started to break out from the bottom of this range, it walked the 21 exponential day moving average, right? System rules, until it didn't. It consolidated down to the 50-day in the form of a bullish flag continuation pattern. And then when price started to break out from that pattern, it accelerated higher again. And the cool thing with this pattern is, so in a textbook, a bull flag the move into the top of the flag is a flagpole, and this is a perfect measured move. You take this is the flagpole, add it to the breakout, and you get your measured move. And like that pattern could almost be featured in textbook. So then when we started seeing price show up on the momentum scans recently, what happened again? Price consolidated in the form of another bullish flag continuation pattern. It came back to retest the recent breakout line, started to appear on the momentum scan. The jobs report came out and price broke out from that pattern. Price of copper, almost the same. So in the weekend report, the goal is to keep things as simple as possible. So I did one example where you can see the 21 exponential day moving average. It acted as perfect support until it didn't. And then it acted as perfect resistance until it didn't. So by looking at that, you can make a plan, you have an expected outcome. And what I like to call that is the red light, green light types of system. You get a red light or a green light. So it's a binary event. Either it's going to work or it doesn't, and you have a way to define risk. So that's a perfect way of systematic trading. We got our breakout signal back here. There's the trigger line, a bullish flag, walk the 21 day until the one time it didn't, stay below the 21 day, and then boom, it broke out again. And so that day too, right, when that jobs report came out, it suggested the government has to print money, or the Fed's the money printer go brr and all money start flowing into these commodities. So every day I'll highlight the indexes in the daily report, and you can see, so even this is the NASDAQ. Look, at price undercut the 21 exponential day once. Do you know how many times I heard people, I feel this is a top, my breath indicator suggests, and even right here. So when we're looking at this, that fourth candle, that candle was on a Friday. Not only was it the end of the month, but it marked the half a year mark, right? So the end of the quarter. And all I seen in my feed was people. So this is another word I call Captain Obvious analysis. Everyone started saying, this is a reversal candle. This is a reversal candle. So you got to take note of that, because it could have been, but you also have to think, well, could that just be rebouncing? Was it the end of the month, right? The end of the quarter, the half a year? And then sure enough, Monday morning rolls around, price action, it continues to walk above the 21 exponential day moving average. So whatever they thought and felt and got scared of that topping candle, the market continues to make new all-time highs. The NASDAQ similar. So here's another thing. So the Dow Jones Industrial Average, we keep hearing people on television every day, the Dow is doing this, the Dow is doing that. When you look at this, the Dow is trading sideways in a well-defined trading range. It's consolidating between an upper trend line and a lower trend line. And the idea, this offers another binary event. So instead of trying to guess what's going to happen, price moves above the upper trend line, right? So I got a green line, green light. That would be a breakout and suggest a continuation of the uptrend from the November low there. Or if it breaks down below the red line, right, it negates any bullish scenario. But also when you look at this pattern, price is consolidating sideways above an upward sloping 200-day moving average, which is something that you probably don't want to short against, right? Because you'd be guessing, and we want to react. So that's just another example of what we're looking at. And another thing too is when the NASDAQ and the S&P, people keep trying to call for another 2008 event. So it might happen, and when that happens, everything correlates to one and everything goes down. But what we've seen when the S&P and the NASDAQ started to pull back recently, money started to rotate into the Dow and the Russell, and then that rotation was reversed. But just because the NASDAQ and the S&P want to top, we got to be aware maybe money's going to roll into these other charts that could start breaking out. We don't know, but that's one thing to be aware of when you hear this doom and gloom. We want to watch and react to what's happening, not fall. And so this is kind of interesting. So when I worked with Greg, he created the Schnell Strength Index, and it was kind of a breadth indicator of his own, but it looked at industry groups. And what Greg wanted to do was define correlation. So he wanted to find correlation with his SSIs and just put money into that space, where I'm more of a stock picker. I want to have strength and I want to have strength as well, right? Because it's hard swimming against the tide. But some of Greg's members wanted me to continue on the SSI. It just became too much work for me to go in manually and put all the data every night, because it wasn't one that was calculated. So I just created this. This is a breadth indicator, and it works pretty good. And this is kind of cool. So red light, right? So I call it the red light, green light breath system. Keep things simple. And you can see this was the only time the breadth went down and the market kept going higher. And I actually have a blog on the website that showed these big technical patterns that the indexes were breaking out from, and the Meg 7 just kept making the market move higher. And a lot of people missed out on this move, and I'm pretty sure a lot of people lost their job because they were distracted by breadth indicators instead of seeing what was actually happening. But besides that one time, it works pretty good. So when we get these crosses, it's usually a pretty good signal. And what was interesting was most recently too, when people kept talking about weak breadth, this system was starting to curl upward. So whether it's going to give a green light signal, we don't know, but it is curling upward when I keep hearing people whispering in my ear, right?
So Dwight, if I can ask,
Yeah.
what is your, this is, I guess, sort of your own version of a breadth indicator. What is it? Like, is it
Yeah, no, it's just the breadth of the New York Stock, or sorry, the breadth of the New York Stock Exchange. And then I just fit I found moving averages that seem to work, and when you back test it, they're pretty valid, right?
so like new high, new low, advanced decline? Like, what do you mean by
Yeah,
that?
it's actually I'm just using the McCullen because
Okay.
so when people, and this is the one thing where I learned with Greg and other technicians, they can all use the same indicator, but they use different settings. And when you use the settings, I couldn't get anything from it. And when I look at all those charts, I never paid attention. So what I did was I found something that helps my brain work, and it keeps everything really simple. And there's no saying, there's no making those predictions, right? Like, oh, I feel this is going to happen. This looks like this might work. Oh, and like, there's like the trend, and there's all those things where they'll give these big spikes and people are like, oh, this indicator spiking, so it must mean something. I want to remove all the noise, all the guessing, keep things simple. And it's either red light, green light. And that's the thing too. So there's no holy grail indicator in the market. This is just to help give us clues, and it has to be used with a combination of everything. We can't on something and think like, I have the holy grail system, I have the holy grail indicator, right? We want to use all these tools together and then react to the market and define our downside risk. So
Good. Okay, thank you for that.
Yeah. So and then so here's just some of these examples, right? So there's the copper, right? The copper ETF was showing up. But the reason I'm showing this, so here's GDX, GDXJ. So, and this is the thing too, right? So this is when money moves into the sector, lots of times the chart patterns will look similar. And I'll just keep scrolling down. So there's the silver. And then here's one too. And I just noticed last time you were on BNN, your topic was chemical. One of your topics was chemical. So I love the space in uranium. It makes sense to me as well. So this is just a big pattern I showed that day where price is consolidating, right? This is a multi-year basing pattern. We kind of bit the price is making, so sometimes I'll use like a parabola, or I'll draw a rounded line because it's easier than touching all the points with a straight line. But this is still making a series of higher highs. Price appears to be setting up on the right side of a consolidation pattern. And look at the PPO, right? So the PPO is setting up to give a potential bullish cross. So right here, this is one you want to look at, and it's risk reward, has an expected outcome, and it gives you lines in the sand to shoot against. And it's just with AI and crypto, it just makes sense, right? There's not enough energy in the world to power technology right now, and that's why some of these utilities in the States have been going crazy. So
yeah,
so
that's
here's
been
one.
my argument for a while. I don't know, you maybe read some of my stuff, but that the need for power is going to go up something like 500% in the next 6 years. And
it's ridiculous.
And we can't build nuclear fast enough. So there is a reason for a bridge such as nat gas and that to cover the power. But eventually nuclear is just going to be the game. So
and that's kind of interesting too, because people get stuck in their old ways, and it's sometimes I'm a little slow to catch on as well, don't get me wrong, but I'd be running these scan results, and I know because interest rates are coming down, the interest rate sensitive stocks will start to move. But utilities started showing up, and I know there's lots of times like, oh, the utilities are showing up, so that must mean the market's going to roll over because they're defensive. Well, maybe it's interest rates, but there's a lot of utilities that are benefiting from this need for power. So stocks that were maybe more value, right? Or like more like a savings account with a dividend, they might become exciting now because there's a demand for the product there was before. And it's like was it Brookfield Renewable Energy, that deal they signed with Microsoft? That's crazy, right? And that has nothing to do with what normally we would talk about in utilities. So yeah, I know it's exciting.
Yeah.
So here's the website. So here's a Nico Eagle, and this is the example. So if we have these charts and you're a subscriber to stock charts, there's the pattern. And I provide a link underneath every chart. So you can just click on the link, right? And it'll take you to the chart, and then you can just save it to your own chart list. So you get my chart, it's already annotated. And this chart's perfect as per system rules, because down here we started getting our first signals. You can see how it just walked above. So in my personal life, I like to use the 1334. You can use the 21. It's figuring out what works for you. And I don't want to tell, my biggest fear is to have everybody on the website using the same stop loss order. Because 100 people with the same stop loss, we're sitting ducks, right? And it's like, that's dangerous. So the goal is to help people just to create a plan for themselves to manage the downside risk, and first to not all have the same stop loss order. But this was perfect. So when a Nico broke out from the bottom, I should have drew the pattern, because gold did start showing up here. I remember I was in Thunder Bay visiting my nephews, and I was sitting at my sister's kitchen table, and all these gold stocks started firing off. So we got those signals. And this is the thing, is like, we didn't know when a Nico started firing off in February or close to March that it was going to give that type of a move. But when the price breaks out, that's part of one of the range of outcomes, and it allows you to capture those moves. And then price consolidated within the flag, and it started to break out. So this is there's a little bit of weakness today, but that was another story telling Keith. So I became acquaintances or friends with Hap Snetton, and I know when I was just starting out and I was younger, I was falling for the all I think I feel people, top callers, doom and gloom. And I messaged Hap in a panic, and I was like, what's going to happen? I'm scared. And he just said, he's like, what are you, an economist? He's like, trust your system. And I'm like, oh yeah, you're right. But at the time, I didn't have a system I could trust. And now, and like I said, this is not a system you can program into a computer, but you can see by the moving averages, when it works, it will hold those moving averages until the one time it doesn't. And then you got to be aware you could get whipsawed out as well. So you got to figure out what you want to do. But that's just an example of, we didn't know that type of move was going to occur. But when you can trust your system, it allows you to capture those types of moves. And so I add a set of Bollinger Bands, because I love Bollinger Bands. So if you put Bollinger Bands on this chart, we were just talking about this in the Slack workspace actually this morning. So this morning, there's gold stocks are continuing to appear, but when we got this parabolic move at the bottom, right now, this type of move, price is running into the upper Bollinger Band. So this might be the type of setup that might, instead of being parabolic where it walks above the 13 exponential on this chart, or the 21, this might be the type of continuation pattern. If the gold sector, if these precious metals trades are going to continue, they might trend above the 50-day moving average, and it might not be so parabolic as it was before, but the trend will continue. And another thing is, I'm pretty sure it's the seasonal period of strength is in August. So these charts are setting up for a potential seasonal period of strength, with the potential of governments having to print money. So
yeah, and actually, sorry, again, I'll interrupt here, because one of I subscribe, as I think I mentioned you, Dwight, like, I probably have 4 or 5 different subscriptions. Some of it's institutional level. So I use Rosenberg, but I also use Bear Traps, which is Larry McDonald. And Larry, I actually interviewed him pretty recently. And one of the things he was saying was, when we talk about the upcoming election, and we always automatically think that Democrats, well, just like liberals in Canada, just love to spend money and bring our debt up. And it's true, they do have more of a tendency to do that. And we've seen we've been witness to that. But he said, in this case, he goes, like, at least in the US side, not so much if the conservatives get in, I think much more fiscally conservative and whatnot for Canada. But in the States, like, Trump has a record of being, MMT light. I don't know if he's a full MMT guy, but he's definitely, he likes throwing the money around. So at least from a monetary point of view, he likes to keep rates low. So, this counts for gold, because if he keeps, either candidate will want to, kind of wreck their their balance sheets, and that doesn't much help, except for gold, so it doesn't help. So
and even just just the amount of interest they're paying on their debt alone, plus all the spending they have to do is just, yeah, it's kind of a predicament. They're in a situation, right?
Yeah, and that's why gold is, because even if Trump got in, he's not much of the spender that the Democrats is, but he's definitely likes to keep rates low. He used to push
Yeah,
Powell or Bernanke, I should say, all the time, and
yeah,
to
yeah,
keep rates low, so he would look good. So it doesn't matter who gets in; it's gonna hurt, it's gonna put pressure on the U.S. dollar at some point. So
yeah,
that's why gold's moving. I mean, I'm always interested in the why as well as the what, you know.
yeah.
So, anyways,
This
carry on. I'm sorry.
this is another thing too, where it's like it took me a while to wrap my head around it, and I don't know if people think of it that way, but we have a basket of currencies, and people are like, well, the US dollar's up against all the other currencies. It because it's up against currencies, it doesn't mean the purchasing power of the dollar is going down. So just because the dollar is the strongest of the weakest, it's like your dollar buys you less than it did a year ago, right? And that's the thing. So like I know Bitcoin's going through a little period right now, but even like any hard assets, houses, right? Gold, Bitcoin, they buy you more chicken than they did a year ago versus your dollar. So that's the one thing that people kind of get mixed up on, or I don't know if they think about it where they're like, oh, the US dollar is strong again. But I'm like, well, even though it's strong, it doesn't mean it's not still losing its purchasing power, right? So, um, so I'll go on. So, okay, so I'll go into some examples here. I know I get a little long-winded. So this is just one example of what we try to look for. So this is from my report on, so this is way back in September 13th, but this is one. So Costco started showing up on the scan results. Inflation was a reason people wanted to go where they could get, again, talking about that purchasing power of your dollar. They want to buy from places where they can get the most for their dollar. So this had a reason. Technically, this was a multi-year consolidation pattern. We can see how price action got tight on the right, right? And this is kind of like a symmetrical triangle where price worked into that coiled spring. It failed at the upper trend line and the horizontal resistance line, consolidated in a bullish flag on the weekly, started to show up on the momentum scans again. And then when price action started to break out, so right here is, so, and then here's the follow through, right? So again, not every chart works this way, but the goal is to try to find these setups. And when you get these setups, the goal is to capture the move, right? So to not get distracted by I feel, and to allow them to work. But this is, so I got the 10-week moving average on this chart. The 10-week is approximately the 50-day on the daily chart. And you can see back here, price undercut once, but still it rode above the 50-day for that entire move. And if I was to draw lines, it'd be another bullish flag continuation pattern, and then it continued to march higher. So that's one example of what we want to try to achieve. And let me see, we're gonna go back here. I'll start closing it off so I don't go back. So then one other example, so this was just JP Morgan. So this was November 14th. JP Morgan was starting to show up on momentum scans. So this was just like a kind of like a continuation wedge. Price started to break out above the upper trend line of a pattern. And then the follow through we get is right here. So this one is a monster, right? So, and this is when we say, like, when you say, well, price is breaking out from that pattern, sometimes you'll get 3 candles and it'll fail. But then when you get these outlier moves, so this one's the 21 exponential day on the daily chart, right? So price action came, broke out from the pattern, and look at through this entire move from what approximately say 144, 143, all the way to 198, it undercut the 21 exponential day like for 2 days. So that's the type of moves, right? Where we get our technical patterns with an expected outcome, momentum starting to show on the scanner results. And when the breakout occurs, we use systematic rules to try to capture these trends. And one thing, so I use the volume by price bars, and you can see on the left side of the chart, you can see how the volume by price bars are big. So when you see that, it suggests there's a major accumulation throughout that pattern. And when price starts to break out above that area, you can see that it's free flowing. So the goal, some people don't like to buy new highs, but ideally when a stock's breaking out to a 52-week high or a new all-time high, in theory, there's no one holding a losing position. So there's no overhead resistance. And those are the type of asymmetrical trades we want to try to capture, right?
Yeah, I'm in your camp there, Dwight. I mean, I always look at whenever I chart, I'm always looking at areas of resistance that I'm gonna, if I buy here, what am I looking at? who might try to sell and, you know, so you could see, well, there is some resistance there, right? So even if you were catching this little consolidation pattern, if you're a short-term trader and you bought here on the gap or something, you knew you had this noise here. But once you get an all-time high, like up here, there's nothing ahead of you. You just keep,
Yeah.
you know, stock can keep going. So,
Yeah.
yeah.
Yeah. And that's the thing where people are often scared to buy new all-time highs. But if it's new all-time high, just remember that there's no one in a losing position. And so some people say technical analysis is voodoo, but a lot of it is just crowd psychology. So when you have an uptrend, you have a winner selling to a winner, selling to a winner, and it keeps going higher. And then there's a saying in technical analysis as well that says trend is your friend until the one time it's not. So the one time that trend breaks, that's the first person holding a losing position. So then when price comes back into the underside of that trend line, then we call it the I just want my money back crowd. And that's the first just even because you know that like, oh, if it just gets back to break even, I'm going to sell. And then that person sells, and then price starts to go lower, and then you get instead of a series of higher highs, you get your first series of a lower low. Then you have two people in a losing position, and then that's what creates a downtrend. So when you look at this too, right? When you look at these trend lines, it's just a lot of it's just crowd psychology. And oftentimes, if you'll have a big area of like when we're looking at the Dow Jones, for example, say the Dow Jones breaks out to the downside, price will often usually come back to touch that line where it broke down from. But everyone inside of that area of consolidation over those multiple months are now in a losing position. So then that's when you get a breakdown from those patterns. It's crowd psychology again, where you just get selling starts like snowballing on itself, right? So
Absolutely.
yeah. So here I'm
Can we
getting
get a
long-winded.
couple more
So
examples and then we'll
yeah. So here's a Coinbase. So this was one that was showing up. We saw this multiple times. So I like to find these stocks too that have powerful moves. And a lot of people don't like crypto, but if you're following the rules with the expected outcome, they can give you outlier trades. So this was November 10th. So this was just an example of the type of move. And so I got it written down here. So was it November 10th and February 10th? So right here, so we see the big volume by price bars. Price was breaking out from that continuation wedge, walked above the 21 exponential day. This one went from approximately $90 to 180.87, and it didn't fall below the 21 the entire time. Price then pulled back in the form of a bullish flag, started to show up on the momentum scan again and went on another run. So those are the types of moves we love to capture. And you don't have to be like, Bitcoin's not real, I can't do it. It's just a chart with an expected outcome and a technical signal. And when it works, it works. And if it doesn't, risk reward is managed to the downside. I think and that's just the other Coinbase example that started showing up. So yeah, that was the February 9th example that one's interesting. And I was telling Keith too with the scanner results. So it was interesting because there's Neo Performance Metals, just a tiny Canadian stock that it's been in this huge falling wedge for like multiple years. All of a sudden, it started showing up on scan results, and we started talking about it in the chat room. And bullish trend, we like to call them the GOAT. So we have this little saying in the chat room, greatest of all time, like Tom Brady. So we use little GOAT emojis and stuff. I'm like, that's the GOAT setup. So all of a sudden, Neo Performance Metals started showing up. It was his setup. He took a position. We talked about it for a couple days, and sure enough, it became a top pick on BNN. So that's the thing with the scans and charts is the market's always pricing everything in by the second because somebody already knows something. And we could see the scanner result was picking up that there was buying occurring, and then a few days later, it became a top pick, and then price action exploded from that pattern like we like, right? So like that might not have been such a technical, but the technicals allowed us to see that something was happening, became a top pick, and then they let the lid off of it. And this was another thing too, because Tesla's been hated, and this was showing up on scan results over and over and over. And I'm not good at bottom fishing, we call it, but this was around a bottom pattern. Momentum started to appear, kept showing up on the scanner results, and price started action. So you can see it started walking above the moving average. And what I like is that trend line in the moving average was compressing price, and price worked its way to the apex. So my favorite moves are when the moving averages pushes price through the upper trend line. And what happened is price worked to an apex of the moving average, and the trend line, basketball underwater, started to break out. And then right here, and lots of people, if you would have told them Tesla's showing up, they would have thought you're crazy. But this is the type of move that we live for, right? And this is right there. price was tight, momentum scans, boom, basketball, underwater, price explodes there. So yeah, I think,
Yeah, you know, you see that neckline, actually, if you go back to the chart, Dwight, it's great because you knew at that 205 level, you know, that if that broke, you've just, let's see if we see the chart.
yeah, can you see it there?
Yes, so you knew that 205 level, you know, that you saw your setup, you got the breakout of the downsloping trend line, and then soon as the 205, you got rid
Yeah.
of all this, you know, all through here, and it was, you know, you knew that the next target would be somewhere around 265 to 270, and that's
Yeah.
literally where it's headed. So
Yeah, exactly. Yeah, and actually, I like that's what I say. I don't know what's going to happen going forward, but prices really extended away from the moving average, so it usually needs time to digest. But I like using the 2-hour charts. Lots of people like using the 60-minute. The 2-hour works for me. But the way the Bollinger Bands. So on Bollinger Bands, so every indicator is a derivative of price, and when you get an RSI or a PPO curling, lots of times if you get a hook in the top of a Bollinger Band, it suggests that the move's over a unique consolidation. And lots of times when you get a hook in the bottom Bollinger Band, it's almost like a PPO cross. And so on the 2-hour chart this morning, it was starting to suggest that maybe it needs a little time to do whatever it's going to do, right? So
awesome. All right, well, why don't you, well, we can maybe wrap up the charts, and I just wanted to just kind of bring the viewers up to speed on if they, you know, wanted to get involved with, you know, the subscription services and you know, what does it cost and how do you do it and where do they go to find you and that kind of thing. So
yeah, okay. I guess I didn't show. So at the bottom of each report, so this is the idea, the scan results. I have an Excel file, you click and you get the Excel file. So if you don't use stock charts, you can, hopefully it works and you can plug it into your trading or your broker or whatever platform you use to trade. I got all of the tickers here. So if you use stock charts, you can copy and paste and create your own chart list. Or if you just want to browse through all of the scanner results to a PDF form, you can. So we do that for American, we do that for Canadian, and then I have requests. I try to stay away from them. Sometimes I get sucked in, but I had a request for me to do penny scans. So I don't publish it on the website, but I'll post it in the chat room for whoever wants to look at it. And yeah, so you can just find me at setyourstop.com. And it's $29.99 a month. And I know when Greg was building his website, he's friends with everyone. So they're like, you got to be at least $1,000 a month because if your website's cheap, people are going to look like you're cheap. But it's like, I want it to allow everybody to have access to this. And I want it to be like a Netflix subscription. So ideally, you don't think about it. And hopefully for 300, like, or you have a yearly membership, $100 a year or $30 a month, $299, right? So hopefully for $30 a month, we give you value and we provide a lot of content. And the other thing, the cool thing too, is like some people just want the weekly report. Some people would rather just have long-term holds. Some people just like the chat room, and the chat room's kind of for people who don't use social media, who are not on Twitter. It's just this place where you can go and be amongst friends. And it's kind of your place to go if you don't use anything else. So we have lots of different options and features, and hopefully you like it. And this is the story I always tell is I have members that tell me I don't charge enough and I need to start marketing, which I don't do. But then at the same time where they're telling me that, I have people who are unsubscribing. So it's either you like it or you don't, right? Yeah.
well, I will say, Dwight, that I like it, and I do use it, and I have like I have 5 or so research services I use, some of which cost me many thousands of dollars per year, and I get something out of each service. But I honestly, the reason I wanted you on is because I know this, a lot of the audience today are retail investors. They're not going to buy, say, you know, my Bear Trap $6,000
Yeah.
a year subscription service, but they might be willing to part with $300 per year. And that I will say, I mean, when I'm looking for ideas, you know, I hit all my points. I pay for the research, I'm going to use it, but I'm on your site and looking at the new breakouts, and it's just it's great for that because you get instant ideas. You look at them yourself. Not all of them will fit your own parameters. I have different parameters than someone else
Yeah.
will have. But in each case, you're going to get ideas that are legit and worth looking at. And that's really all you can ask for with the research service. So
Yeah,
I
and
fully-
that's just one more thing is that's the goal is everything I do is just all the knowledge I learned from the people I respect the most. And like I was telling you, I make sure I watched all the technicians on BNN, read all of the books, look at all of the blogs, and then over time I took bits and pieces from everybody, and then I figured out what worked for myself, and that's what led to me creating this website. So the goal is when we have our meetings or when we talk, it's not to just copy each other, but to take from people in the workspace, learn from me, learn from others, and then to try to create something that works for yourself, right? And that's the goal I'd like to do with the website. So
Absolutely. Well, Dwight, you're a good guy, and I like your service. So I continue to wish you all the luck in the world with your service, and I hope a few people do decide to subscribe from watching this, because again, there's nothing in it for me, by the way. I'm a portfolio manager. The only way I get anything out of it is someone comes and deals with us at Value Trend. But I do think for the at-home investor that's willing to do research, this is valuable. So Dwight, this was very informative. I think a lot of people will be a little bit more enlightened by some of the concepts that we talked about today. Tight to the right. That's something you and I know about,
yeah.
but a lot of people aren't maybe aware of these concepts. So I think you've done a good job.
Yeah. Yeah, that's awesome. Thanks.
So let's end
Thank
it
you
at
so much
that.
for everything. I appreciate it.